Hi, Wim Lievens from my trade class, and in this little video I will show you my new tool WL SuperFive. Why did I develop this tool? In order to convince people or show people how it is better only to trade when market conditions are right. So actually trade less, not more, but trade better. And what I'm going to do in this little video is to show you the tool on the NanoTrader platform. I think that is the best way to show the tool, to show it in real life, and you can use it afterwards. You know, this little video as a manual. It's a lot easier. So what we'll do, just open a chart. And I will use, for example, because this is still morning, we will use the DAX and just open a random chart to begin. So this is just a chart. And when you have purchased the pack, you can actually here in template studies, in the store, you will find my name. And the two SuperFive packs are there. When you bought pack A, you will of course only find pack A. When you bought both packs, you will find them both. I will just use B, 5 strategies incorporated, and you'll have a random start page or chart which is opened. I've used the WL bars here as beginning chart, but from this you can build any chart. It means you can switch this to range bars, Renko bars, you can switch this to 1 minute, 5 minutes, hours. You can do what you like. So I'll just show this, and I'll change this into range bars. And I can also, when I prefer looking at bars and not candles, I can change this very easily. Also, I should mention that every color you see on this chart, you can change. So the background you can change, the clouds you see on there, you can change the colors, and also the candles. So that's not an issue, but just to show you. And if, for example, I want to go back here to candles, but I want to go to minute charts, I'll just switch to minute here, minute charts, or I can go to 5 minutes or 15 minutes, like this, 15 minutes, or just one last example, 60 minutes. Very easy to do, but never forget, once you've changed the chart, as always, don't forget to save the chart. So I can, for example, save this and say, well, this is the SuperFive chart in 60 minutes there, and just Bob's your uncle, done. Very easy. So also in the Forex, many of you trade Forex, I know. You can even use 5 pips, 10 pips charts, whatever you like. Okay, good. So this is actually quite simple to start. You can open as many charts as you want, and I will show this later in the presentation, how you could organize this, how you can build real trading systems by using this tool. Now, in order to show you how this tool works, what I'm going to do, I'm just going to go into the designer bar and show you how the tool is structured, how it's built. And for those who are new to NanoTrader, you will see that NanoTrader, actually the designer bar, is actually the backbone of this trading platform, because every trading system that we put in the platform couldn't be very simple or a very complex trading system is actually well, structured in the designer bar. So in the trading section, you put in your account, one of the accounts you use, or your paper account, the quantity you want to buy. In the brackets, it's the money management system. You can put in as many stops, targets as you like. Of course, there are plenty of different stops, target types you can use. It can all be introduced in the designer bar. You have a nice little tool which is called Tactics, which I don't think people use enough. You can always find the information about this in the manuals on the website of We Are Self-Invest. But this is actually quite, it's an interesting trade management tool. Plenty of possibilities, which of course all can be introduced and used also in the SuperFive trading system. But then we come to the point where indicators, where actually traders will implement or put in their strategies. And there's a whole list. It's very simple to use, and I will show you what's in there. Now what I'm going to do, actually, I'm going to use one of my slides here because it's a little bit bigger, so you will be able, I'll show you later on the platform, but you can see it's easier to read, and I can't increase the text on the platform, so I'll do it this. So what you actually see in the designer bar is the SuperFive Express. And as I showed you before, you can always choose between a candle or a bar look. Personally, I prefer the bars when I work with ranges, and I will use normal candles when it's time-based, like 5 minutes, 60 minutes. That I think is the logical choice, but you know, everybody makes up his own mind, so that's not a problem. Now here, just gonna write a little bit on the chart here. As you can see, the strategies or the signals are deactivated because you have long signals and short signals, and by default they are deactivated. This is done on purpose because a trader has to choose what he wants to do. You want to trade in both directions or just one. You will see that certain strategies, the way they're set up, it would be wise just to activate in one direction and not two directions. Okay, so you just fill in if you want to trade both sides of the market or just one. And this is an interesting little tool. It's the amount of signals wanted. That means how many alerts do we want to trade? So, and this is especially for corrections and momentums is important, because the more signals or the later you will trade signals, well, the more risky they become. So, and this I will show on the platform. It's come back to this later. But if you see, for example, and I will go back to my initial chart, I'll show you again, template studies, store, my name, pack B, and just click on there, up, and there you have the original chart. Make it a little bit bigger, and you change it to bar again. Okay, now let's say that we want to trade corrections, and then we have to decide how many signals am I prepared to accept. And we always will begin when the color, and we will come to that cloud later. You see here it's red, and here it becomes green, right? And so when the color changes here, then the counter starts. That's signal wanted. So if I want two signals, this will be the first signal, for example, and this will be the second signal. But this would be number 3 and number 4. These signals, when the counter is set at 2, will not be triggered, or you will not be alerted. So it is, again, the choice of the trader, how many signals, how many alerts she wants to trade after the trend color changes. Now, I will go into the 5 trading strategies later, but I wanted to share this with you first. Now, I will explain to you what we actually see on the chart, what is the anatomy of the chart. And well, those who've seen my videos on YouTube or have been following me for a few years, you will know that I like things to be simple. I think a big problem today is that people often make things way too complicated, and therefore I live by the principle that less is more. And so I've tried to put as much quality information in there, but with as little as possible. Also, I like it to be very visual and easy to see, observe and analyze, because believe it or not, it might not look like much, but there is a lot of information in here. Let's see. Okay, what do we see? First, we discussed the bars, the candles. You can use movement bars like range bars, WL bars, Renko bars, or you can use the classical time candles. You use whatever you want. So that is the first choice. Then you will see that, and I will call them clouds. You see 2 clouds. You see this bigger cloud, red and green, and the other is blue and magenta. Now again, you can change all these colors as you like. Let's start with the green and red one. That is called the WL trend. Now what did I do here? Many traders, myself included, use different time frames when we trade, or different range dimensions when we trade. Just give you an example. Let's say we trade in 1 minute. Many traders will also look at 5 minutes, which is one step up if you want. And that's an excellent idea. That's very good, actually. So that's 5 minutes. Now, the problem, of course, is that when 1 minute the market goes up, in 5 minutes the market goes down, things get complicated. It becomes a lot, people get confused. And I can't blame them, it's not easy. And so I tried to solve this. And what I've done actually is I have programmed, if you like, 2 dimensions together. It's done automatically, so if you're in trading in 1 minute, you will automatically see 5 minutes. If you do 60 minutes, you will also see 4 hours. There's always, like a dimension in time, 4, 5, can be 6, but it's about that region. It's a calculation on the ranges which are done in these time frames. It goes back to my courses, but it's done in such a way so you can see 2 time dimensions in one chart. And what you also see is that I only trade, or try only to trade, when markets are trending. And the way to define that, personally, I find it very easy to use the exponential moving average 20. So to make it very easy, if the market stays on one side of the exponential moving average 20, I will trade in that direction. But if it trades on both sides, I will stay out. Now this is shown here in a very, I think, intuitive way, because what it actually does is, what you see here on this WL trend cloud, if I may call it that way, is that there is a fast side and a slow side. And the fast side is actually, it's not exactly the same, but it is similar to the EMA 20 zone in the dimension in which you trade. Let's use, for argument's sake here, for that we're trading in 1 minute. And this would be the EMA 20 zone in 1 minute. The trick is that the slow side of this cloud actually represents the EMA 20 zone 1 dimension over. So the direction issue now is solved. When WL trend is red, we look for short entry, or we wait for short signals. You will not get long signals. If the cloud turns green, of course, we look for long signals. What is also very important is to look, it's very, I think, easy to see, is that if this cloud gets wider, call it expansion, or smaller, contraction, it shows us, tells us something about the strength of the movement, the trend. So when we see, like here for example, that it's getting wider, we're in good shape to trade. If we get a signal, an alert, we say, hey, look, market's strong, this might be worthwhile, it's a good signal, we might trade. But if you see, for example, like here, where these two clouds are all messed up, that the momentum is still within that WL trend, or you have the WL trend, which is very thin and doesn't expand, let's not waste our time. Yeah, we have to accept you cannot always trade. And this is the first question we have to answer. Are conditions in our favor? Because we just want to trade when they're in our favor. If not, we will not trade. So I think WL trend helps a lot by defining this. This is one. The second cloud you see is WL momentum, and that's the blue and magenta line. And it is based on, part is EMA 8 and also other stuff, but it shows in a very, I think, visual way, movement, momentum. So when we see, for example, that, as I said here, that both are entangled, forget it, we don't want to trade. But when we see that there is a distance building between WL momentum and WL trend, we say, hey, now is our time, we're waiting for our signal. So it's very simple. Now also, of course, there's another reason why you see these two clouds. They are our support, if you like, our basis on which we had to program the alerts and the strategies. We can't build these things out of thin air, so we needed things, but I think I'm very happy with the results we had. We've worked 9 or 10 months to get to this point, and I must say I was very surprised that it was possible. 5 years ago, never have thought that you can program these things so precisely on trading platforms. So as you can see, even after so many years, we can always learn. So this is the anatomy of the chart. You choose which bar candle you want to use. Second, you see the trend in 2 dimensions and you see whether it's getting stronger or not. 3, you see the momentum or movement now, not on a trend basis, but now on a momentum basis. And that's all I need to know. If you trade price movement, that is all you need, in my opinion, to trade. Okay? In my courses, I talk about different levels. I like to see previous day highs, lows, pivot levels. That is true, but this is, I would say, 90% of what I want to see. Okay, good. Now let's clean this up. Hold on, clean this up, and we'll go back to the designer bar. And now I'm going to use the designer bar because I want to show you certain strategies, certain movements. I'm going to make this a little smaller here, so we'll see a little bit more movement. All right, you see the market move now. Good. And I'm going to make sure that you only see the area which we want to see now. I'm going to make it a little bit bigger. Okay. One thing I need to do is to choose, I'm just going to use the paper account for this presentation. And all right, and I can, hold on. It's loading, that's it, good. Now, before I go to the strategies, there's one other thing. People who use NanoTrader know this. There are different ways to trade with the platform. You can trade manually, as most people do with most other platforms, where you just have to enter every order. You can do this here as well. You can trade semi-automatically or full automatic. Now, semi-automatically, what does it mean? You actually, the trader, decides when he or she enters the market. So you enter your order through the speed trader or any other way. You click a button left. You can use different ways here, but you decide to say, okay, that's the moment I want to get in now. You put in a market order, limit order. You can do whatever you like, but you decide when to enter. Because you programmed in, or you set the stops and targets beforehand, the platform takes over and will manage your position. That means that only the entry is done manually, but the money management is done by the platform. That is semi-automatic, and that is activated here, Trade Guard Auto Order. This is a way I trade. I would say about 90% of my trading is done with like this. Now you have with this tool the auto order option, where the platform, depending on the criteria you entered, will trigger, enter the position and manage the position as you have instructed the platform to do. I must say that it is incredible what these machines can do today, because it's fail-safe. I mean, there are never any issues with that. It works like a charm. So that is actually something that I, after many years, that was new to me, because I never liked giving my positions to a machine. But I have to say, more and more I do this because it works. Yeah. So good. So these are the three ways. Now, before I go to the strategies, I just want you to know that in order to use this tool, you can use this tool in different ways. First, most obvious way would be to use it as an alert tool. Let's say you have 8 different Forex pairs, or you have 12 different products in 5 minutes or an hour, and you say, okay, I like to trade corrections. When a signal is presented to you, you look at it and then you decide to take the position, yes or no. So you get alerted and then you decide yes or no. That is one way. The second, as explained now, is auto order. Is to say, hey, let's go. I like this strategy. I just want to put it in automatic mode. I've put in a few other filters, which you can also do, and I let it run. I've done some backtesting on it, and I let it run. That is the second way. The third way is to use these strategies as scanners or screeners to go and find instruments which, I would say, fit a certain definition or fit a certain price movement at that specific time. Give you an example. You get home in the evening, or when you live, if you live somewhere else, it depends on the time zone you're in. But you work during the day and you want to trade in the evening. Now you can go and sit and you know, turn on the euro dollar or the Dow or whatever. But if at that specific moment there's not much happening, it's pretty much a waste of time. So you could use screeners or scanners to go and find instruments which at that specific moment are moving or are showing promise, like, I don't say, Tesla or oil. Or so you expand the possibilities. So that's the third way to use it. So these are the three ways. Now, why is this possible? And I'm not going to get too much in detail here, but I just highlighted the word meta-sentimental. And the meta-sentimental in a nano trader is actually, well, you could call it the brain of this platform. So basically what meta-sentimental does, it's the computer actually, it's the backbone of this thing. And we load, or we give this meta-sentimental all our information. We say, all right, we'll trade this instrument and we'll just buy 3 lots, and stops are like this and targets are like that, and this is my filter, and this is my trigger, and this is when I enter, and this is when I get out. All this information which we fill in the designer bar, meta-sentimental takes in, processes it, and has 3 answers for us, 3 possible answers. Or they say buy, or sell, or do nothing. And that is how it works. This is why we can program all this stuff. And this is also why we, for example, we can backtest. So that's very interesting to be able to do that. Okay? So I just wanted to, you won't see the meta sentiment, you could see it, but the meta sentiment is not for the trader, it's for the platform. Yeah, we just want to see the result of what the meta sentimental does. For those people who want to know more about this, I would say go to the WL SuperFive website and you will find plenty of information about that. Good. Now, we've talked about that. We talked about the chart. We talked about the long and short signals, the amount of signal wanted, and now we get to the strategies. And as said before, there are 2 packs. Pack A, 3 strategies, 2 additional strategies with pack B. A, you will have here corrections, reversals, and momentum. That's pack A. Support and resistance, tests or breakouts are in pack B. Good. Let's begin with the corrections. And as you can see, by default, all these strategies are deactivated. Yeah, so nothing. Now, what are corrections? The way these corrections are set up, that markets which are trending, when they are trending, very often move away from the exponential moving average 20 or moving average 20, come back, move away, come back, move away, but stay more or less on one side of this area if you want. It might go a little bit under, but it will stay on that line more or less. Now, so this area often serves as a, I would say, support area, if you like. And this is how it's set up. And you can see here there are 4 possibilities. Fast dimension, slow dimension, fast and slow, both, or momentum. Let me first explain what I mean with fast and slow dimension. And I will draw again. You see here, for example, this is the fast dimension. And this is the slow dimension. So here, what happens here is, this is a signal. I'll just, this here should normally trigger, could trigger. There has to be, there are very specific conditions. So I'll have a look first. I'll just put it on fast and slow like this, right? And of course I have to add here long signal I have to say yes. Short signal, I will say yes as well, but it does exactly what I thought it would do here. And you see here what happens is that we have a triad, market structure point if you like, which touches one of the EMA zones, areas, which in this case is the fast one. Now draw it again so you can see, you see this is the fast one. You have 1, 2, 3, boom, signal there. This is a signal, okay? Now it could have gone here, there, on the slow area, and you would have had a signal too. So you can decide, you just want to trade the fast ones, the slow ones, or both. What you have to see, the way it is, how should I say this? The way it is organized with setup is that I need to see a trend which is getting stronger. I need lines or areas to go in a certain direction. Before this, I get an alert. So very often you will see that there is no alert. Why? Because the signal is not exactly right. Okay? So you can do these two. Now another one is, and that's a very interesting one, is the one that we at the very end we were able to define, and it's great potential, is actually when we're in the area, but we have the whale momentum, which you see here, changes color. So you see this here? See here? It's green. And you see the whale momentum change color there. Very often, very interesting signal. So, and again, here, no signal. Why? Contraction. See? So, there is a lot of, how should I say this, know-how put into it. It looks very simple, but you can trust me, the conditions are very well defined. Yeah, so you actually have only in the correction strategy, you already have 4 options. Yeah, you can do it again. Some people just add, for example, use this one, and they will observe visually the momentum. So that is all possible. Now, I'll just take this one out, and we brings us to the second strategy, which are reversals. And I have to say, for me, the reversals were an eye-opener. I have to say, it was something that I, hold on, reversals, yes, long and short. It was something that I didn't really trade a lot in the past, and it absolutely, and you have several here, you see, and some are good, some are not good, but I'll try to explain to you which are the ones that I like to trade. First of all, let me bring you to an area, and this is probably one of the best things in this tool, where it actually shows you where not to trade. Look here, which is not trading is a strategy. Yeah? Not trading is a very good strategy. Yeah. You see here that the clouds, the WL trend cloud, is pretty flat. There's no expansion. See this? This, whatever signal you get, whatever strategy you get, there's no point. So whenever we see something like this, even if we get the signals, we don't trade. So again, it's not by definition when you get a signal that you should enter. No, you have to observe the WL trend, WL momentum. Say, hey, okay, does it look good? Okay, that's a good one. I'll go. Or no, it's all flat. There's no real trend reinforcement or expansion, and therefore I will not trade. Now what does I'm just trying to find a good example here so I can tell you what I mean with a good reversal. A good reversal is, for example, I would say not this. I had one this morning, this one. We actually traded that one. Yeah, we actually traded. Go a little bit further. We actually traded this one. Yeah, that was the one I was looking for. This one is the setup that we look for. Why? So go back. All right. Because before, what is the reversal? The reversal is actually when the trend in both dimensions breaks. That means I've always talked about short dimension, long dimension, or short time frame, long time frame. When both of these break, for us in this dimension or these two dimensions, the trend is dead, and therefore we will trade the reversal. Good. Now, what are we looking for is this. You see here, for example, that you have a low here, but this low is higher. We call this, also this high, low is higher. We call this accumulation. When you then have a break of this level, which is the slow EMA 20 area, you get a signal. This one is textbook. That's what we're looking for. So when you have flat WL trend, or when for example it comes from way too high, let's say that it would have gone here right through like this, we would not have traded it. Why? Because we want it to build up strength first before it breaks through. Same goes in the other one when on the way down, and then we call it distribution. This is something that we trade fully automatic, and in the coaching sessions, for those who are interested, I will show you the results. I will show you the business model. It's always updated. I will show you in real time. You can do it on the backtesting system of the platform. So there is nothing to hide, just shows you how it works. All right. But for those who trade it in an alert mode, please watch, look out for these accumulation, or when it's down, distributions, highs and lows. Okay, good. This is reversals, brings us to momentum. Momentum is one of my favorite strategies, always been. And there was one of the reasons I started to trade with movement charts, what I call movement charts. You can call it range bars, Renko bars, or the bar that I invented, the WL bars, but it's the same principle. Yeah. But what is a momentum move? And in trading momentum moves, it's difficult. Why? Because very often we're too late. If this is a 1 minute chart, for example, and then it goes like this, and then at a certain moment, boom, it goes like this. We missed it. Too late. What are you going to do? Enter here? I'm not sure. I wouldn't. So what do we do? And what this strategy does, and it works better with movement charts. It can work. Sometimes you have these hesitations also on price charts, but on movement bars it works better. What sometimes will happen, if you would look at the same chart in a range bar, all these bars have the same size, and this strong move would look like this. You would have many bars, of course, but what very often happens is that you have a small, very short hesitation. sometimes only a few seconds. That is an opportunity, because then we will strike, put our stops right under there, and will ride the rest of the move. These alerts are put in here. And how is it done? Put in the momentum. I just have to take out the other one. Sorry, I forgot to take out the reversals. Oh man, this is the momentum. Here you see this, the beginning of a move. What you actually see here is the triad now, which for the corrections was built on these EMA 20 zones, is now programmed on the WL momentum. So these blue and magenta movement areas, movement clouds, when you have triads building on those, you get these signals. Now again, there's a few other conditions which have to be met, but very good signals. And here I would like to emphasize again that I would keep the amount of signals to a minimum. Why? Because, well, momentum moves happen very fast, very strong, but don't last very long. So it's not something where you want to take the 6th or the 7th signal. Same goes for corrections. It's something that always is presented in my courses. I would say, trade the young trends, the young move. If you can't get in the beginning, stay out. Yeah, it's the same thing here. All right, but excellent signals. And why are they good? Because you know there's movement. When you get this alert, you know you have a movement at that time. So that condition is already met. Good. So that's how we trade these strong impulses. And so these 3 strategies are pack A. Pack B, we've done something special. Strategy that I don't think enough people trade or don't see the potential is the support and resistance tests. So if you see a market and you look at the chart, you can do this on a 60-minute or a daily chart and say, well, yeah, this is really a support area. Let's say the market is coming a little bit back to that area. You can draw in an alert or even set it on full automatic. And of course you can do it in many instruments on the same time. In Forex, this is done a lot. Now, how does it work? I'll just deactivate the momentum. Let's assume, I'm just trying to find something here. I'm just using this as it goes. Let's say that this area here on the DAX, 13,720 to 750 was a support area, and that I only want long signals, of course. So short signals I set at 0, and I set the upper level. And what did I say? I said 13,750, 13,750. That's too much. Not that high. The DAX 13,720. I said, right? Good. That is not right. Let's take this out. Alright. So 13,772. That's about right. And then I said yes. And I get this. Also signals are triggered. You can see a buy and a buy. Very often stops are put underneath the area, of course, which was drawn. But you can see here 1, 2, 3 signals. Area clearly defined. And it actually, I must say, it works on all time frames, and is actually very good because you don't have to sit in front of the computer all the time. And this, of course, this strategy is set specifically for each instrument. If you think oil reached the 65 level again, yesterday, I think. Well, okay, if it goes down again and you see on your chart that you think that oil, well, there's a support level at 50, well, you can set it in. No, it stays in. So there's a lot you can do with that. All right. Now that is support and resistance. Take that one out. Okay. Which brings us to the breakouts, which of course are very known, very popular, very difficult to trade, very explained in my online course how, in my opinion, you can trade this correctly. I'll just use one of the examples here. Just use this one here, and I could say, again, I'll use the 725 level with the 745 level, or something like that. Okay, now again, I want to trade to the upside, long signals only, short deactivated. First put in the upper level, say 13,745, and then the lower level 13,725, and then I say here yes. You'll see different color. See here, different color, gray, just to make it easy. And what is good about this is that actually a mistake many traders make by trading breakouts is that, let's say that this is the breakout area. What people will do very often is set, for example, an order here, buy stop order, or here. You have to understand 70-75% of these breakouts are false. They will come back. These orders are taken away, boom, and goes the wrong way. They shake the tree. Traders are shaken out of their positions. So that doesn't work. So what you need is a confirmation of a breakout. It breaks, it comes back, or it gives a little signal, and it breaks again. And that's how this was set up. So that's why you don't get a signal here, but you get one here, which is exactly what should happen. So when the level is broken and confirmed, that's when you get the signals. Yeah, this is how the breakout is set up. Now, within the session, the coaching session or sessions, which we will do together, depending on the strategies that you want to play, I will help you with exactly how to set it up, and I'll give you all the fine-tuning that goes with it, also with the support and resistance tests. It depends on which time frame you're going to do this. So there's quite a few things that we need to go through, but apart from that, it's all ready to go. Now, last but not least, the alerts. They're here at the bottom. Pop-up box, just a message. If you're sitting at your computer, very easy. Play sounds. There are 5 different sounds which I put in, so you could use different sounds for different products or for different strategies. It's all possible. But also, never forget, in the platform, especially for people who want to use this tool on longer time frames, use the email function. Yeah, just be alerted when a certain signal appears. You get an email. You just watch on your phone. Say, all right, I'll have a look. If you like it, okay, you can take the position. So you can actually use this tool from scalping to swing trading. You can use it semi-automatically, alerts, fully automatically, or as a screener. Yeah. But what is most important is that you focus on certain movements and only trade those when market conditions are in your favor. So trade less but better. And by the way it's set up, I hope for many traders who very often trade always the same products, it will help you a little broaden your horizon and use more products at the same time. And why not try Tesla or stocks which you've never traded before? Just put them up there and see what happens. I will show you one last, just a little example, just to show you what the possibilities are. Just opening a new page here, you will see that I put in many different products. Oh, it opens on the wrong side. That's not good. Let's put it in here. Right. Now you see that I can actually just put in 7 a few minutes ago, but I could add up to 16 in here. Put in some forex pairs. Gold is in there. Crude oil is in there. I can use different time frames on the same. I could put in stocks here, more raw materials. I have a huge horizon, which I actually, with this tool, can monitor on the same time. Now, it goes without saying that there's a little bit of, mileage you have to do with this. Test this, because you can't trade 24 instruments on at the same time on a 1 minute chart. That would be too much. So the more instruments you load or you want to trade together, the bigger the time frame should be. But that is things that are pretty easy to figure out. It's a little bit of experience and things we can discuss during the coaching sessions we have together. So I think that's it for this little video. Thanks again for your vote of confidence. Good luck with the tool, and I hope to talk to you soon. Bye-bye.